There we go. Hello and welcome to Martyn Lucas Investor. My name is Sensei and you're watching the Morning Forecast Show. Thank you everyone for tuning in. We've got inflation data today, and as we know from when we covered the FOMC minutes just a couple weeks ago, it's all about inflation. The Fed want to see inflation going down. Right now, we are in a macroeconomic situation where the Fed doesn't care about jobs anymore because they're pretty strong. They just want to see inflation going down, because if they don't, they've said it very clearly now. If inflation is not going down and they have any concerns about inflation, then what's going to happen? They're going to keep rates where they are. And they even introduced language recently in those FOMC minutes. That's why we covered it. Everyone says it's boring, don't cover it, but we don't care about what's boring or not. We care about what's important. They introduced language in that FOMC report that essentially said, if inflation stays where it is, if it stays sticky, we can increase rates and actually have rate hikes. So let's get into today's report. Again, it's from our very own newsletter. First link in the description. You can get it for free as well. And there's a free trial and a 25% if you want the full premium plan. Let me put the countdown on the screen. 49 minutes to go. So let's get into it. Who's in the chat? Say hello in the chat. I want to see everyone's name in the chat. Let's see who's here with us this morning for a big inflation day. Let me see if I can go over here. There we go. Let's go over to chat. Audio, video, good here. Thank you, Silver Days XRP. Oh yes, we've got everyone in the chat. Wow, it's a busy show this morning. It is an important show this morning because we are looking at inflation, which is especially important now that we've seen the FOMC minutes and now we know what the Fed is focused on. Yolanda's here, Human Being Liz is here, Moon is here, Rhino Skin, Silver Days, Human Being Liz is here, Silver Days XRP says smash the like buttons and subscribe. If you have just tuned in, it just takes 1 second and it means a lot. Please. Oh, and Poor Man to Rich Man knew what I was about to say. Listen in.
At Poorman to Richmond tipped $1.99 through Super Chat. Like and subscribe. Thanks for everything, Sensei.
Thank you, Poor Man to Rich Man. I appreciate the Super Chat. Thank you for supporting the channel. Please do hit the like button, as Poor Man to Rich Man said. And if you haven't done so already, please do subscribe. The Nutella is here. Raccoons TV is here. Hi, great people. Henrik is here. Member for over 2 years. Incredible. Human Being Liz is here. The Nutella says, let's go. Poor Man to Rich Man. Morning, family. Josh Monroe is here. Good morning. Human Being Liz says, lol. Ricardo says, good morning, banana heads. Volatile week for the market, making me think bear market has only begun. Yes, it's strange, isn't it? We know we're in a bear market for crypto. That's undeniable. We called it 6 months ago. We're in a bear market. Is the bear market over? Well, I'd like to see a few changes of structure before I even call the end of the bear market. Is the bear market over? Maybe for the crypto market, but I don't think so. Are we in a bear market in the stock market? No, we're not. We're hovering around all-time highs, but we are seeing signs of a bear market. We're seeing signs that people are giving up. We're seeing signs which could indicate we're closer to a bottom, but it could also indicate that this is just the beginning. We can see people getting frustrated. We can see social metrics going down. We can see great earnings like with Nvidia, but even the best earnings. I mean, it was great earnings, and it's not just about did it beat on earnings? It was its guidance. Its guidance was the best we've seen in a long time, and the stock's down. So we're in this weird situation where actually, is this just the beginning of the correction for the stock market? Well, I've been saying this year is a year we get a correction in the stock market. Again, I'm not 100% certain of that. No one can be 100% certain of that. If I was 100% certain of that, then I'll be putting all sorts of put options out there and I'd be a billionaire next year. But I'm prepared for all scenarios, but my inkling and from what I've learned in the markets and from the research I'm doing suggests that we're going to go down this year. The stock market is going to go lower. Bitcoin's going to go lower. The crypto market's going to go lower. That doesn't mean come at me next week because crypto pops 20% and you said it's going to go lower. Actually, if you go and look at my research and my charts in the newsletter and what I show on the channel, I've been saying we can even bounce up to 75,000, 90,000 for Bitcoin before we put in a lower high and go lower. So it's not about the short term. I'm talking about this year. And it can come in May, it can come in October, it can come whenever, but May and October is technically, using the charts, what we imagine is the lows for crypto. But I think we can go lower this year. And I think that inflation is going to be sticky. I think the Fed's not going to cut as much as the market was expecting. Me and Martyn have been saying for the longest time 1 or 2 rate cuts this year. I stand by that. And to be honest, imagine if it's rate hikes. I mean, I'm not saying that's likely, but we're starting to see language of that. So I do think be careful. The market can go lower. We've got the AI risk, which everyone's now talking about. Again, AI is going to change the world. Don't get me wrong. I'm bullish on AI. I love AI. I think it's going to be great for, I mean, there's risk with AI, but I think it's going to be great for humanity. If we're looking at the stock market, it's going to bring a lot of money in. But there are cracks forming. There are people that might be over leveraged. There's companies that are going to go bust. It's not even about how great AI is. It's about the sentiment. If people start getting scared, which we can see with Nvidia. Nvidia's earnings came out. People are still scared, even though it was the best earnings possible and the best guidance. People are scared about the spending. They're scared about the other companies. Can they continue spending this much on AI? So if those fears add up, we can still go into a bear market, even if AI is the best thing on earth. So I think this year we will head into a bear market. The stock market's still at all-time highs. So that's why I have the way my portfolio is positioned. That's why I have the portfolio challenge, because I'm building from the base. I'm getting the utilities. I'm getting the copper, because copper is going to benefit from AI, but it's also a defensive position as well. I'm getting the healthcare because that's defensive, but also benefits from AI. You can't just be blind to the fact that you don't just want to be uninvested, but you also want to be taking care of your portfolio. So if you want to check out the £5,000 portfolio challenge, it is in the newsletter alongside all the other perks of the daily newsletter, the portfolio challenge, the training course. There's so many things. There's a free plan as well. Check it out. First link in the description. I'll see if I can put it in the live chat as well. There you go. There's a free trial in the live chat. So yeah, I do think the market's a bit weird. Social sentiment's down. Best earnings on Nvidia, and we're down. So is it a sign of a bear market coming? I think probably yes. The Nutella says we're only getting 7. XRP, says Silver Days XRP. Human Being Liz says, hello, Josh. The Nutella is here. Let's go down. Guy Kemp says, hello, morning from Fort Lauderdale. Lovely to have Guy here today. Human Being Liz says, hello, Tony. MCX says, evening PPI and Sensei. Evening PPI and Sensei. What do you mean? Like and subscribe, says Silver Days. Good morning. Audio, video, good here. Okay, I'm going to have to skip through the comments. Limit orders set at 150. Yeah, have your limit order set up, guys. How many times have I said? In a crypto bear market, even a few times a year, we get big liquidation events. And that's how I benefited, was at October the 11th. XRP dropped from $2.50 down to $1.70. I caught the bounce, made 70% overnight, all because I had a limit order in place. So don't be afraid to have some limit orders in place at levels you think will never hit, because most likely we will hit them. Okay, remember in the bull market, everyone said XRP is never going to go below $2. XRP is never going to go below $3. XRP, and now everyone's saying XRP will never go below $1. Well, it's probably going to go below $1. Let's continue. Hello, Tony. Evening. PPI said take it, like and subscribe. Audio good. Sensei, real talk. Yeah, we're not sugarcoating anything here. Human Being Liz says HM before after Nvidia's rise. Like and subscribe. Alejandro here. I'm here, Sensei. Hello, Juan. Lovely to have you here. Human Being Liz, YouTube. We're all here. Everyone's here. Okay, let's go, go, go. Are you guys ready? 41 minutes, PPI inflation report. This is going to be big. Can everyone please smash that like button? If you have just tuned in, it takes 1 second. I know most of you haven't done it. Just take 1 second. Scroll down. Hit the like button. If you're on the TV, go over and press the like button. You can do it. There's no excuse. Love from Netherlands, says Daddy Pascal. Nick Jones is here. Thanks, Gary. Still bullish. Extra bullish, says Silver Days XRP. What are your thoughts on Netflix and Paramount bid war? Well, Netflix is out, and they have said they're not doing it anymore. And Paramount have essentially won. Again, there's going to be about 8 months of litigation. And are they allowed to do this? And merger rules and all funding. Go and check out the newsletter. There's 2 stories on it today. Good morning, Sensei. I already hit the like button. Thank you. Smash the like button. Thanks, guys. Okay, let's get into it. Morning forecast, Friday, the 27th of February. Happy Friday, everyone. Let's Have a good Friday and enjoy our weekend. Today's stories at a glance: Netflix abandons Warner bid. Warner Bros. Reports mixed earnings. Anthropic rejects Pentagon deal. Iran nuclear talks stall. Nvidia slumps despite beat. PPI report impacts markets. Someone just asked about Paramount, so let's quickly. This is quite a big story, so let me just touch on it. So Paramount is set to acquire Warner Bros. Discovery for Discovery for 111 billion after Netflix abandoned the bidding war to maintain fiscal discipline. The massive consolidation creates a media powerhouse controlling HBO, CBS, and CNN. Yet the deal is one of the most leveraged in history. The acquisition is deeply dependent on billions in debt and equity from private backers and sovereign wealth funds. Investors are now weighing whether the growth of Max streaming services can outpace the rapid collapse of traditional cable television revenue. While Netflix shares jumped on the news of its withdrawal, the success of this new entity hinges on its ability to manage a debt load while legacy advertising income fails. This shift fundamentally alters the competitive landscape of the entertainment industry and tests the limits of corporate leverage. Yeah, massive leverage. I'm going to come on. I'm going to tell you the number. It's ridiculous. The market cap versus the leverage. I think it's the biggest leverage deal ever. So winners and losers. We've got Carius Life Sciences up 20%. Block CEO Jack Dorsey, that's up 26% on its plan to cut 40% of the workforce. That's 4,000 jobs as part of a sweeping pivot for AI narrative operating model, while simultaneously raising its full year 2026 gross profit outlook to 12 billion. Very interesting. Mara Holdings up, Applied Optoelectronics up, beating earnings. Dell up 9%. The real beat. The real beat Q4 estimates. Paramount is up now 16%. It's rallied after Netflix declined to match its $31 per share offer for Warner Bros. And Netflix actually also went up because its investors didn't want it to get involved in that bidding war. So it's a win-win for both the investors in both those stocks. Duolingo down, Apartment Investment and Management down, Emergent Biosolutions down, Ginkgo Bioworks down, CoreWeave down. Again, if you want to see the reasons for the top movers and losers, you can get that for free by being a newsletter subscriber. Okay, has everyone hit the like button? Is everyone ready for PPI? Let me just tell you that number for the amount of debt. Yeah, so the deal reshapes Hollywood's power map. Paramount Skydance, a company with just 12 billion in market cap, is swallowing Warner Bros. For 111 billion in enterprise value. You might think, how the hell is that possible? Well, it's one of the most leveraged mega deals in corporate history. Go read more about it in the newsletter. That is a crazy situation. Let's skip through Anthropic. We looked at the Iran talks. And yeah, they said diplomacy, we're getting somewhere, we're going to meet again next week, but it's undeniable the amount of firepower in the region. I think everyone is expecting strikes to occur. We've seen this before, the US saying they're willing to negotiate, and then they strike. So this massive military build out, a lot of people are now saying there's probably going to be a strike. If you want to hear more about what they were speaking about, go and check out in the newsletter. There's also a story on Nvidia beating every estimate but losing 259 billion in a day anyway, which is again very strange. Let's go to deep dive. Sensei's cheat sheet. You get this if you're a newsletter subscriber. Again, I won't go through all of it because it's reserved for our premium members, but also premium members get to have it in front of them. They get to see it. They get to have it before. They get to have it alongside the data release, and they get to have it for every single data release. So every data release, every big earnings, every FOMC minutes, Japan's carry trades, Japan's interest rate decisions. You get cheat sheets to guide you through it. Obviously, the smaller events, less time goes into it. The bigger events, more time goes into it. But again, each of these cheat sheets, minimum about 2.5, 3 hours research up until maybe 5 or 6 for the big events, such as FOMC. So it's worth getting the newsletter just for the cheat sheets. Anyway, release 8:30 Eastern Time today, Friday, February the 27th, via the Bureau of Labor Statistics. 35 minutes to go until inflation. Again, inflation is big right now because, well, it's very important to keep an eye on because of what the Fed said in their FOMC minutes. The PPI. So what is PPI? We'll get into that. But the Producer Price Index (PPI) for January 2026 drops this morning at 8:30 a.m. Eastern Time, 1:30 p.m. GMT. You've got the time on the screen. This measures wholesale level inflation, and this is such an important metric people skip over. This sort of gives us a view on what CPI and PCE is going to be, just what it's going to be in a few months' time, because we're looking at the wholesalers, we're looking at the companies, and they pass the cost on some of the time, most of the time, to the consumers. So this measures wholesale level inflation. Wholesale level inflation. That's the companies. What producers charge each other for goods and services before those costs get passed on to the consumer. The number matters more than usual today because December's PPI was a significant upside shock, plus 0.5% versus plus 0.2% expected. That was an upside shock. And because specific PPI subcomponents feed directly into the PCE price index, again, PCE is the Fed's preferred metric, and some of the PPI subcomponents are exactly the same for PCE, the Fed's preferred gauge. So we're getting an idea into PCE as well. So this is quite important. Again, the big three: CPI, PPI, PCE. The January PCE report lands March the 13th. That will be 5 days before the Federal Open Market Committee meeting, the FOMC. In short, today's PPI sets the table for the next 3 weeks of rate path pricing. So this is what the market's going to take into account to give us an indication of what's going to actually happen at the next meeting, but more importantly at the June meeting, and again, the bigger context being how many rate cuts, or if any, are we going to get this year. So all of it, and again, it's not really about jobs anymore. Yes, if we will look at jobs data, but not as closely as we look at inflation data, because inflation is what the Fed really cares about right now. So let's set the scene. The economy is growing but decelerating. We saw the GDP numbers. Let me just make sure we are running. Is everyone still here? I just had a little bit of a... Yeah, let me... There we go. Yes. Can everyone make sure you have hit the like button and share this out if you haven't done so already? So will PCA decide about red or green? War in Iran can happen this weekend. Any thoughts? War in Iran can happen this weekend, but they have set out talks for next week. I mean, who knows? You can't just bet your portfolio on a war happening on a weekend or not. No one really has that information. We'll look at the poly market odds in a second. Do I have them up? Let me go over to live chat. Let me get the poly market odds up. But again, you just have to be prepared for that. And again, most of the time, we did a piece. It's in the newsletter about US about military action. What normally happens is it's a sell off, and then by the end of the year, you're normally back up. So it's never advisable to just panic sell. And the most advisable thing in the world for you to become financially free is to have a diversified portfolio, go out, work, put money in every month, and just don't have emotions. Buy and hold. And if you want to be trading, have it with a small part of your portfolio. And that's statistically how it works best, even in times of war. Buy, hold, leave it. And we did research. Go and check it out. It's in the newsletter. So it doesn't matter. Is there going to be a strike this weekend? Is there not? Well, nobody knows. What are we supposed to do? Are we going to be here gambling and predicting that's going to happen this weekend? No. So again, it doesn't play a big part into my portfolio. Is it going to happen this weekend or not? Well, it looks like it's going to happen at some point. So just be prepared for it. PPI is a bit more important because that's more of a long-term effect on the macroeconomics. And that can decide the trajectory for this year as well. Of course, a war is important, and that's why we did a newsletter on it. And we said if this is the best case scenario, the worst case scenario, the median scenario, if it's just limited strikes, if it's major strikes, oil going up, inflation becoming a problem, no strikes, how much is priced in, how much oil is up, and how much that's priced in because of this war that's going to happen, and what will happen if a peace solution is put out. So we're looking at all the possibilities and just getting prepared for them. but we're not here to predict when it's going, well, if it's going to happen this weekend or not. But we can look at the prediction markets, which do exactly that. By February the 27th, that's today, there's an 8% chance. By February the 28th, there's a 21% chance. By March the 1st, 29% chance. March the 3rd. So you're looking, it's not likely, it's not over 50% chance that it's going to be this weekend, as you can see. But there is a pretty significant chance as well, 22, 21%. We are looking that by the end of the year, there's a 78% chance. So the markets are pricing in a strike on Iran this year. And at what point? Well, by March the 10th, it's looking like a 50% chance. So yeah, it does look like a strike is likely. It is probably going to happen, as I say, so just be prepared for it. We're going to have the market go down on that. Then it might rebound pretty fast, depending on if the strike's going to continue or if it's a one-time strike. So just be prepared for all scenarios. Don't be over leveraged. Again, I don't think this year is going to be great. So I'm more cash and more gold than maybe I should be, because the most advisable thing is to always be investing in a diversified portfolio without leverage. So I'm betting that the market's going to go down a little bit, but not with all my money. And this is one of the things that can push it down lower. So let's continue with the PPI for today. The economy has been accelerating. Q3 2025 GDP came in at 1.4. That was a massive surprise to the downside. Remember, we covered that last week. The labour market is cooling. January payrolls were 130,000. Unemployment is around 4.6%, near a 4-year high. Inflation has been trending lower. CPI printed at 0.2% month over month, 2.4% year over year. That was below expectations. Core CPI is at 2.5% year over year, the lowest since March 2021. But there is a caveat. The October-November government shutdown forced the Bureau of Labour Statistics to carry forward missing data, which may have been which may bias CPI readings lower. Moody Mark Zanti estimates true CPI closer to 2.7%, which is again where we've been for over a year now. The Fed held rates at 3.5 to 3.75% at the January the 28th meeting. After 3 consecutive 25 basis point cuts in late 2025, 2 members dissented, preferring another cut. Chair Powell said it is hard to look at the data and say that policy is significantly restrictive now. The January FOMC minutes revealed a split. Several members favored cuts in inflation if inflation continues declining, while most raised the probability that rate increases could become necessary. And that's what was important about the FOMC minutes. It revealed that, yeah, if inflation goes down, we will cut rates. But actually, and this is the first time they've said this in a while, we could raise rates as well if it doesn't. So rate expectations are in a 97% hold in March, so don't expect a cut. It's going to be a hold, no matter what inflation is today. June is the first meeting where a cut is roughly a coin flip, 49% probability. The market front runner is 2 rate cuts for this year. If we go down to the poly market data, which for some reason isn't, we'll click on it here, we can see that about a 10% chance for no rate cuts, 1% chance for 1 rate cut, that's an 18% chance. 2 rate cuts, that's a 27% chance. 3 rate cuts, that's a 20% chance. 4 rate cuts, it's split everywhere, but the biggest probability is 2 rate cuts this year. And the second biggest is 3 rate cuts. The third biggest is 1 rate cut, then 4 rate cuts, then no rate cuts. So the market is pricing in about 2 rate cuts at this moment in time. Headline PPI. So these are the numbers that are coming out. Let me give this a refresh and we'll come on to exactly the numbers that are releasing in 26 minutes time. So if we scroll down here, you can see exactly what's coming out. It's PPI, Producer Price Index, month over month. Producer Price Index year over year. Producer Price Index excluding food and energy month over month, and Producer Price Index excluding food and energy year over year. So that's the most important number down there, the one excluding food and energy year over year. That is priced in currently at 3%. You can see here, 3%, just next to me there, 3%. That's the month over month at 0.3%. That's the The 2.6 is including food and energy, and that's month over month, including food and energy. Normally, we like to look at the core more, but all of these numbers are important. The first thing I'm going to be looking at is the year over year, excluding food and energy, which is, again, consensus at 3%. The more we deviate from that number, so the more we're further away from that number, whether it's on the downside or the upside, the more we're further away we are from 3%, the more the market's going to move. If it's above that number, then inflation's gone up. Real concerning. If it's below that number, then the markets could have a rally on that news. But just to show you that's where we're getting the information, we'll also be going over to Bloomberg. So let's zoom in Bloomberg and get ready for Bloomberg to be covering this. But normally we have the information before Bloomberg, but we will definitely listen to their analysis as well. Let me increase the quality over here. Okay, and let's get back to our analysis. So headline PPI is what we're looking at. The broadest measure of producer price changes across goods, service, and construction. This is the PPI number flashing across every terminal at 8:30. Recent trend. After running soft through most of Q3 of 2025, 0.1% month over month in August through October, headline PPI jumped to 0.5% plus month over month in December. It was a pretty big shock towards the upside. That was well above the consensus of 0.2%. And we saw what happened with PC. That was a shock towards the upside as well. Again, PPI gives us a bit of an inkling what's going to happen with CPI and PC. So that's why we look at it. On a year over year basis, PPI has held at 3% since November. Again, very sticky stuff. So the consensus, what the market's pricing in, as we just saw, is 0.3%. The previous is plus 0.5%. The consensus year over year is 2.6%, and the previous on that was plus 3%. So if we go over here, yes. There is Continuum Economics forecasting a slightly softer plus 0.2% month on month, expecting trade margins to pull back from December's spike. So here's our table. Hot would be plus equal or over 0.5% or equal to over 2.8% year over year. That would signal that December was not a fluke, disinflation stalling or reversing. Equities from S&P 500 will be down 0.5% to 1.5%. Nasdaq will be hit harder. Bitcoin can be down 2 to 5%. Bonds can be up 5 to 15 basis points, and the rate cut path will be June cut, odds fail, possibly no cuts in 2026. In line would be December spike fading, gradual progress. It will be muted, or will be plus or minus 0.2% in the S&P 500. So pretty flat with crypto, modest relief on the yields, and no change in the June rate cut odds. If we are call inflation, not less or equal to 0.1 or less than equal to 2.4 year over year, that would mean December was a one-off. Disinflation is back on track. The S&P can start rallying 0.5 to 1%. Rate-sensitive sectors will rally as well. Bitcoin will rally. June cut odds will jump back above to more likely. We'll have 55 to 60%. And then if we're now looking at core PPI, which again, that was headline, this is now core. This one's the one that maybe a little bit more important, the one I'm going to be looking at first, excluding food and energy. So what is this one? This one strips out volatile food and energy to reveal the underlying inflation trend. This is where analysts forecast. This is where analysts forecast for signal versus noise. Recent trend, core PPI has been volatile. November printed a flat 0%, then December exploded to 0.7%, the largest increase since July 2025 and massively above the 0.2% consensus. On a year-on-year basis, core PPI reaccelerated to 3.3% in December from 3% in November. Guys, if you are enjoying this and you are getting ready and you are watching, 21 minutes to go now, please do hit the like button, do subscribe. Let me get a poll in the chat. Let's see what everyone thinks. Are we going to sorry, is inflation is the I'm going to put a poll in the chat. Is the inflation print going to be hot, cold, or in line? Hot, and then we'll put next to it crash, depending on how hot it is. Cold, which will be a pump, and then in line, which would be steady. Is the inflation print going to be hot, cold, or in line? Hot, crash, cold, pump, in line, steady. Let's put your thoughts in that poll. We're 20 minutes away now. Also, if you want access to newsletter and these cheat sheets and the daily news and the portfolio challenge and the one-on-one DMs and the private community and the training course, the deep dive research, you can get it for free on the free plan. You can upgrade to a premium plan. You can get a 7-day free trial as well. So click this link and you can choose the plan you want to be on. That link does give you a 7-day free trial as well, and go and check it out. Okay, let's continue. I'll come back to that poll. What's everyone saying right now? 28 votes. Most people are saying in line. I'll come back to that poll in a second. So now we're looking at core PPI. Again, this is the most important number we're getting today. This will be excluding food and energy. Core PPI has been volatile. Let me make sure Bloomberg is running.
That trade-off between manufacturing versus asset light, multiple compression is generally what one would expect. On top of that, I'll give you one last thing.
Sure.
So the key reason that we're expecting multiple compression is we're actually very forecasting, I think, amongst the highs on Wall Street in terms of earnings growth. So we have a very low target, but a very high earnings forecast. And generally,
okay, I'm gonna put Bloomberg on for a second. There's someone at the door, and unfortunately, I have to answer it because there's no one else here. So, okay, I'm gonna put Bloomberg on. Go check out the cheat sheet. Go check out the newsletter. I'll be back in 30 seconds.
that's the call for the year.
It's been hard to be bearish, the equity market, for a long, long time because the buybacks have been so large.
Yes.
There's a point in your note about supply. And not just the buybacks, but the IPOs we're going to see potentially later this year too. How critical is that a piece of your call?
I think that's huge, because if you think about the last 20 years, we've had this wonderful shrinkage argument going on, right? We've had accelerating buybacks, no IPOs. IPOs stay private longer. You know, they only come to market in kind of full maturity. So I think that that's been a boon for equities because there's fewer stocks to buy. It's a supply. It's a key supply demand story. Today, when you look at the three biggest private equity plays in the U.S., they're all tech, and they're valued at something over $1 trillion. If we saw all three of them IPO, that would be more than all of the issuance proceeds we've seen over the last 15 years. I mean, it's kind of a crazy setup in terms of supply coming online in equities. And then in IG, investment grade, we've already seen supply increase pretty demonstrably. It's been absorbed, but I think at some point, you know, maybe we don't have such a strong appetite for tech debt.
The numbers are massive. Savita, it's good to see you.
Great to see you.
Fantastic research, as always. Savita Subramaniam there of Bank of America. Equities declining this morning. Let's get you an update on news.
Someone at the shed door.
Yahara has more. Hey, Yahara.
No,
Hi, John.
it's a delivery man and no one's
nearly
home.
20%
So
in the pre-markets.
there we go. Okay, let's get back into it. Look, this is Block. We were talking about this earlier. They've cut their workforce, and look how much they're up today.
Changing the few.
We'll come back to Bloomberg for their thoughts on the PPI, which will be coming out shortly. So let's go back to our analysis. If you have just tuned in, hit the like button. Scream 7 tonight. Don't do it, Sensei. What do you mean, Scream 7? Someone needs some tools from the shed. Yep, someone needs some tools from the shed. Okay, let's continue. Only 16 minutes away now. So core PPI is the first number I'm going to be looking at. It has been pretty volatile. It's been naught, then a massive surprise in December to the upside. Now what we want to see is validate the December, or is it going to go back to lower numbers? Year on year, core is the first number I'm going to be looking at. It accelerated to 3.3% in December from 3% in November. Now we're looking at consensus around, I think it's 3, isn't it? 3%. Yeah, 3% is the consensus we're looking at. Just this number to my left. Okay, so a hot print, again, these are the month-on-month numbers, will be above 0.5%. So again, let me put this number right here. We can see that we're expecting month-over-month to be 0.3%. If it's at 0.5 or higher, then that confirms the December trend, service inflation not fading. That will be a risk-off sentiment for the market. Again, that would bring down the odds of a rate cut in June, bring down the odds of rate cuts this year. And we'll get a sell-off in the market. If it's in line, December was an overshoot. We're normalizing, modest relief, pretty much already priced in because that's what consensus is. Maybe we'll still get a little bit of a rally because it's nothing awful. And then a core inflation will be anything lower than 0.1%. That would be a sharp reversal, core pressures easing fast. That would be risk on, markets moving, crypto moving, all to the upside. The December 0.7% core month-over-month print is what rattled the markets. Today, it's about whether that was an outlier or the start of something. And again, it could be the start of something because the Fed is very, very worried about this and they're starting to talk about it more and more. Oh, the movie Scream 7. Oh, right. It's a movie. It's out in theaters today. Oh my god, number 7's out. I don't even think I've watched all the previous ones. I'm reading the chat. Was that a bit creepy for you guys? I'll be right back, and then I come back, and I'm just like, oh, I don't know. Oh god. Was that why this came up? The December 0.7% core month-over-month print is what rattled the markets. Today is about whether that was an outlier or the start of something. The 0.3% print would be the market Goldilocks outcome, enough of a step down to maintain the disinflation narrative without raising alarm bells. So here are the key subcomponents to watch. Beyond headline and core, these line items tell the deeper story today. Trade services margin, and that's why we'll be going to Bloomberg to break this down for us. Wholesale and retail markups, these jumped 1.7 in December, driven by a 4.5% spike in machinery and equipment wholesaling margins. That single moved accounted for roughly 2/3 of December's services increase. This is the most volatile component and the biggest swing factor for today. If it reverses, headline PPI could print soft, even if everything else is firm. So the biggest number within the PPI numbers, again, PPI is a bunch of different indicators, would be looking at the wholesale retail markups. PCE, critical services, these subsectors feed directly into the Bureau of Economic Analysis, BEA, PCE calculation. As I said earlier in today's show, PPI has some components that will be used for PCE as well, and PCE is the Fed's preferred metric, and these are the components that will be in that, and that's why it's important. Healthcare services is in both. That rose 0.1% in December. Even a small acceleration to 0.2 or 0.3% here is meaningful shifts in PCE expectations. Portfolio management fees and airline passenger services. PPI, excluding food, energy, and trade services, rose 0.4% month-over-month in December for the 8th consecutive monthly increase. The previous reading was 0.3% year over year. This is the cleanest read on underlying producer inflation and the number that Fed watches most closely. Energy, final demand energy fell 1.4% in December. WTI crude is around $66 a barrel this morning. Low energy pulls headline PPI lower. Oh, we've got Brian in the show. Lovely to have Brian here.
Brian_Alessandro tipped £1.99 through Super Chat. Keep up the good work, Sensei.
Thank you, Brian. Really appreciate it. Thanks for the Super Chat. Let's continue. Lance Strength has just joined the show as well. Good to have Lance here. Okay, if you have just tuned in, we're now 10 minutes away from inflation. Again, inflation report. This is PPI. This gives us a a look into the future because it tells us what the companies are doing on a wholesale level, which feeds into CPI and PCE. There's even certain parts of this report that goes straight into PCE. The FOMC minutes was very clear. They might raise rates if inflation continues to stay sticky or go up. They brought that language in. That was new language. They never mentioned that before over the last year. Now they are. And they said jobs is no longer an issue. All eyes are on inflation. So all eyes are in what happens in 10 minutes. Is it going to be cool, hot, or in line? Please do hit that like button on your way in if you want to follow along with our cheat sheet or get the premium plan or the 1 week free trial or the free plan. Go and check it out. The link is in the live chat, first link in the description. So the combo matrix, this is what we're going to look at. You have to look at the whole thing as one. Today's PPI includes multiple readings released simultaneously. The third column below refers to a handful of service categories buried inside the PPI report that the Bureau of the BEA uses as direct inputs when it calculates the PCE price index. So there's an overlap between this and the Fed's most preferred metric, PCE. The big three are headline healthcare services, portfolio management fees, and airline passenger services. These are not separate. They are not a separate release. They are in line with PPI data published on at 8:30. So when you look at this column here, PCE linked PPI services, this isn't a separate release. This will be in the PPI documents. So headline PPI. This is if it's all in line. Headline PPI in line, core PPI, again, we're looking at the month-over-month figures. Again, this is where we're going to be looking at the data. You can see month-over-month over here, 0.3, and the month-over-month core PPI, excluding food and energy, essentially. So this one over here and this one over here. They're targeted at 0.3%. That's the consensus. That's what the market has priced in. So if we get that, if we get 0.3 in both of them, and the PCE-linked PPI services are stable, then again, the market might pump a little bit. It'll be pretty muted action. Just the market might go up a little bit just because people normally take their money out, and if it's as expected and there's no major concerns, they might invest back into the market. So that will be pretty much nothing burger, and then you would continue with whatever else is going to move the markets today. Again, that's not the most likely option. We rarely get everything be exactly as expected. Headline PPI, if it's 0.1 and core PPI, sorry, if headline PPI is 0.3 and core PPI is also 0.3, we can have hot healthcare portfolio and management spike. That's what could be embedded in it, and then that will be a hidden hawkish outlook. Again, it's not a massive issue, but we will see the markets actually go down even if we're in line. And then here's when it gets a bit more interesting. If we get a cool number, if we get below or equal to 0.1 on both of them, that will show stability, cooling, disinflation will be confirmed. December would be noise because remember we got December numbers and that was a pretty big shock towards the upside. This will show that actually that's just a bit volatile and we're not holding those really high levels. The market will like that a lot. We'll see a rally across the board, 1 or 2, maybe 1% on the S&P 500, and the crypto markets will go up 3-4%. And this is the big risk. This is when the markets crash because right now the markets aren't looking strong, in my opinion. Yes, we are in an uptrend. Don't deny the uptrend. The crypto markets are certainly in a bear market. That they're looking weak. Stock market, the S&P 500 is still in an uptrend, but it's looking weaker and weaker by the day. It's failing to break 7,000. So it's looking for any reason to sell off. As we saw with the NVIDIA earnings, the best earnings possible, the best guidance possible, and look at NVIDIA crashing for whatever reason, AI cracks, sentiment. So the market's looking for a reason to go down. If we get hot CPI, that would be the bigger, hot PPI today. That would be the bigger risk. Cool CPI, cool PPI will be great. Markets will rally a little bit. Inline PPI will be fine. The markets will be steady. They might go up a little bit. But the most volatile outcome today will be hot PPI. Above 0.5% on core, above 0.5% on headline. That'll be alarm bells. That'll show December was a trend, not just a blip. There'll be a sharp sell-off, maybe 2% on the S&P, 1%, 2%, and bigger on the crypto markets. Yield spike, rate cuts will be out of the question anytime soon. Wadey says, any update on the portfolio challenge? So we've done 2 big purchases. We've done too big. We've done incremental purchases of adding to some of those positions. The next would be, again, let me give you an update on where the portfolio is at. The portfolio is up 0.1% today. It is up since we started it less than, yeah, we basically started it, I guess, a month ago, maybe. Anyway, we're up 3.6% so far, but we're building the base. So there is research going ahead right now with a couple sectors. It'll be utilities and consumer staples, and then if we get that correction later on in the year, then we'll be diving into some higher risk equities. So that'll be fun. So yeah, keep an eye out on the newsletter. We've just got an amazing super chat here. Mexican pesos, is it?
Adjiko Vallejo tipped MX $100 through super chat. Mr. Sensei, good morning from Playa del Carmen. Today Friday, you look like you need a couple of margaritas. Enjoy and have a great weekend. Cheers amigo. Cocktail glass emoji.
Wow, that's very
bottle
kind. We haven't had a super chat like this in a very long time. Thank you, Jacko. Really appreciate it. Mr. Sensi, good morning from Playa del Carmen. He's enjoying his holiday in Mexico. I love it. Today's Friday. You look like you need a couple margaritas. Thank you. Enjoy and have a great weekend. You enjoy your holiday. Make sure you have some margaritas yourself. Thank you for the super chat. Okay, we're now 4 minutes away from inflation data. I hope everyone's here with me. Can everyone please hit that like button? Takes 1 second. So yeah, if it's hot CPI, 0.5% on core, 0.5% on headline month over month. Again, we'll be looking at it over here. This is where we'll see the data release. There's month over month figure, year over year headline, month over month excluding food and energy, year over year excluding food and energy. So you can see these are the ones excluding food and energy. These are the ones of headline. That's the consensus. If we are deviating more, the bigger the market move. If we deviate towards the upside and actually get higher numbers than what's on the screen, that's when the market will have the excuse it needs to go down. So what could be a surprise? BLS weighting rebalance, seasonal factor recalibration. Let's just continue to the market position heading in. So we've got the S&P 500 pretty much near all-time highs. It's a very weird structure. It looks like a topping out structure. If you look at the S&P 500, oh, didn't mean to do that one. Go over to the US 5. Yeah, look at this. You're just putting in slightly higher highs, slightly lower highs, higher highs, lower highs. It just doesn't look like a big pile of strength. It doesn't look strong right now. So the market's waiting for something to potentially push it down or a major catalyst to get it to break out from 7,000. Again, the long-term trend, we're not in a bear market right now, so the trend is towards the upside. It was always best to be invested in the market and keep adding to it. But if you're a trader, if you're a swing trader, if you want to have an advantage potentially, then you look at these structures and you look at the way the market is and you want to invest at the lows and you want to sell at the tops. The S&P 500 is losing strength. And we saw with Nvidia's earnings, we got great earnings, great guidance, and we were down. We were down yesterday. How much? 5.5% on the best earnings and the best guidance going forward. So the market's looking for reasons to go down, and that's why today's PPI is so important. Inflation is so important now because of what the Fed said in their minutes. Again, no one likes to cover the FOMC minutes, not the FOMC report, but the FOMC minutes, because they think it's boring. But we looked at it and it essentially said we're not cutting rates until we see inflation going down, and in fact we might cut. We might have rate hikes if inflation doesn't stay where it should be. So it's all on. Let's see what happens in 2 minutes. We've seen the Nasdaq. Gold is at near all-time highs. There's the geopolitical fears. There's AI fears. There's carry trade fears. And there's overpricing fears. So yeah, let's see what happens. Again, next FOMC, very, very likely we won't get any rate cuts, even whatever happens today. That's pretty much baked in. April, looking very, very likely we won't get any rate cuts. June is the meeting that we might get rate cuts, depending on what inflation does. So today is PPI. Next, in 2 weeks' time, we'll get PCE, which will be very important. And then 3 days later is the FOMC, which will get more reports from Jerome Powell. So this is the biggest release until March the 30th with PCE and then March the 18th with FOMC. Today's PPI feeds directly into the PCE calculation. If PPI service components run hot, expect PCE forecasts to shift higher ahead of March the 13th. I'm going to quickly put a chart on the screen as well. We're going to put the S&P 500 on, let's put the NASDAQ on one side. And then we're going to put the NASDAQ is on one side, is heading down as we speak. And then we're going to put Bitcoin on the other, just so we can see the market reaction when this has. Here we go. Is that on the screen now? There we go. Bitcoin and the NASDAQ. So let's get ready. Yeah, this is again, this is what the Fed is looking at. They're not looking at jobs data. They're looking at inflation data. PPI is a sort of a look ahead into what the market is going to do with CPI and PCE. The numbers are on the screen. If it's higher than 0.5%, it's hot. If it's in line, then we might get a little rally. If it's cool, that's not lower than 0.1. Let's go to our breaking news. Okay, we're getting the numbers in, and it's a massive, massive bad inflation report, 3.6%. This is hot. The market's not going to like this. Not good at all. 2.9%. So the numbers are 0.5% headline month over month, 2.9% year over year headline, 0.8% on the numbers for excluding food and energy month over month, and 3.6% year over year. Let's go over to Bloomberg. These are not the numbers you wanted to see. Not good release once again.
For final demand up 0.5%, the same as in December. The forecast was for a 0.3 rise. Take out food and energy, and we're up 0.8 after 0.7 last month. And take out trade to that, and you're up 0.3. That one's down just a little bit. Last month, we saw a big rise in trade services, and that is not happening this month. On a year-over-year basis, headline 2.9. Ex-food and energy is 3.6, and ex-food and energy trade 3.4. The core rate, the 3.6, is a significant increase over the 3.3% we saw last month, while the 2.9% headline down a tick on a, I guess, basis effect from last month. But these are all important, not just for the headline numbers, but because a lot of the PPI feeds into the PCE, which is, of course, the Fed's indicator. I'll look some of those up now while you're giving us the market reaction to all of
Mike
this.
McKee, thank you, sir. What do you do with that? An upside surprise on PPI. Yields were down. It was a break of 340 at the front end of the curve. We erased some of that move. We're back to 340. Tens were at about 397. We're back to about 398. Yields
this
are
is
still
not
lower
good.
on the session. In the equity market, when the data dropped, so did the stock market. We're just about holding on to some of those levels. On the S&P, we're down by 0.9, down by almost 1% on the NASDAQ. Look, first look, just taking a step back, there are some members of the committee on the FOMC right now worried about inflation. It's why they've established, for some at least, a prolonged pause at the Federal Reserve. And if you're worried about a downturn in financial markets and hoping the Fed's going to step in and bail you out, with numbers like that, you're not going to get a hand from the Federal Reserve.
What's interesting to me is that the stock market responded more than the bond market because yields are still where they were. So it's not exactly underscoring any kind of acceleration in economic growth. I mean,
This
sure,
is
you had a
another
little bit
thing
of a
to
retracement
tick off
of
and
some
say
of
that
the
there's going to be a bear
downward
market
move in
this year.
yields, but still a bit into bonds, even as you have inflation coming in hotter than expected. So what exactly is going on here? What are people looking at if it isn't inflation and if it isn't necessarily the path of rate cuts by the Federal Reserve, even if the stock market is looking at just that?
Pure risk aversion at the moment, it seems, building over the past few weeks. Mike's going through the numbers for us. Upside surprise across the board here on PPI. Mike, you're digging into it. What do you see?
Well, a couple of the things that feed into PCE are up, of course, not
this is what we're looking for in the report.
Exact way they will feed in terms of what they will mean, but portfolio management, which has been a problem, up 1.5%, and international airfares 4.3%. So some significant rises in some of the things that will feed into the PCE numbers. And given what we're seeing here on the headline, it pretty much guarantees that the January PCE numbers are going to come in somewhere around 3 or north of 3, and that's not going to give the Fed any kind of reassurance that inflation is going toward their target.
Mike McKee, thank you, sir. Stay close. Got to talk about OpenAI as well, because AI and the economy right now is basically the same thing. This headline crossed just moments ago. OpenAI saying Amazon will invest $50 billion, $50 billion. The initial investment, $15 billion. So OpenAI, big capital raise this year, big year for that company, getting some money.
Yeah, and expanding their pact by over $100 billion over 8 years. OpenAI.
Stay tuned for the full analysis.
With respect to AWS, what's interesting to me is how OpenAI is trying to compete at the same time that you have Anthropic very much in the news these days. I just wonder how much of a battle it is and how much each of them is trying to jostle for a leg up. It's sort of like what goes on underneath the pile of bodies in a football playing field you don't actually want to know. It kind of feels like that right now.
$730 billion valuation. These valuations are huge.
To the point that you made with Savita Subramanian, and it's really interesting. If they
Supply.
if they IPO this year, how much oxygen does that suck out of the room? Where does all the money come from? And what does that do to a public equity market that has actually been contracting over the past number of decades? All of a sudden, we're dealing with a pretty big expansion.
Getting some details from OpenAI as well on monthly active users, weekly active users, 900 million now. That's the latest number from them. So a big deal between Amazon and OpenAI. And to go back to your point, SpaceX, OpenAI, Anthropic, we're talking about something well north of $1 trillion, pushing $2 trillion from 3 companies, potentially all IPOing in the next 12 months. Crazy.
At the same time that people are grappling with what exactly this disruption will do and dealing with a risk-off environment, look, they're all going to be doing roadshows proving their worth. We're going to hear a lot more doom scrolling and different Substacks explaining how transformative the technology is going to be. If it is going to be transformative in that kind of way, given all the uncertainty in markets, will they be able to raise that money in the same kind of capacity that they previously were expecting? How much do market conditions play into when these IPOs come to market?
Mandeep Singh of Bloomberg Intelligence standing by for this breaking news. Mandeep, welcome to the program. These are some big numbers. How important is this development?
Breaking news
guys. It's huge when you think about, OpenAI really starting off with Microsoft and now branching into this big partnership with Amazon. I think it's really huge in that context. And also, NVIDIA and OpenAI had plans to kind of partner in terms of almost 100 billion. Now that has come down to 30 billion. And Amazon is the one who is really...
Wow, there's so much going on, guys. Let's recap on what we've just seen happen. Breaking news left, right, and center. You can see the crypto market coming down there, the stock market putting in the lows of the days ahead of its open in just under an hour. It's happening. It's happening. We've warned about this, and it's happening. It's hard. It's hard. It's hard when you go against everyone. 7 months ago, 6 months ago, what was it? I don't go check on the channel. I put out a video that crypto's entering a bear market. This was when everyone loved XRP, when everyone loved me because I loved XRP as well, and I do love XRP, and maybe I love it more than I should. But I had to look at the data and what was in front of me and what the crypto market was doing, because no matter how good something is, if the market's conditions aren't good, it's not going to perform well. So I put out a video saying bear market for crypto. I put out a video saying bear market for XRP. I'm taking some profit. I think we're going to go into downtrend. Again, I'm never 100% sure, because if I pretend I'm 100% sure, then that's just ridiculous, because no one can be sure of these things. So more likely than not, we're in a bear market. Everyone hated it. I got so much hate, lots of dislikes. Comment section was full of people saying you're a traitor, this, that, and the other. And look where we are now. We're down. We were at near $3 when I put out that video on XRP. We were above 100,000 on Bitcoin, and today, right now, Bitcoin is down at 65,000 or $65,600. And if we look at XRP, it's down at $1.36. We went as low as $1 or $1.10. So it was unpopular. And for the last few months, I'm saying, okay, the stock market's next. I've said, look at what inflation's doing. I've said, look at the risks. Yes, I think AI is going to be massive. Yes, I think it's going to be transformational. And yes, I think most people should stay invested in the market, because the research shows you stay invested, over the long term, you'll do better. But the people that are trying to day trade this, the people that are over leveraged in this, please be careful because there are risks building up, and you can just be risk-free by just buying and holding assets or having some cash on the sidelines to actually benefit from these crashes, because these crashes, if you keep buying every 1% dip, what are you going to do when it goes down 20, 30, 40%? Are you going to get liquidated? Are you going to buy more? Can you buy more? What's going to happen? And right now, we're breaking support again on XRP. The S&P 500 is down 0.6% on the day. Gold is spiking up. Guys, gold. How long have we spoken about gold? Gold, we kept telling you for the last 3 years, it's going to go up. It's going to continue going up. And then it shocked me about how high it went up. Yes, I had predictions of $4,000, then 4,700, but they seemed ridiculous at when we were at 1,500, 1,700. When I said $100 silver, people laughed at me when I said in Q1 of 2026 we're going to get $100 silver. Go and check the videos just 6 months ago. People laughed at me. We were at $25, $30, $34 on silver. There is so much federal government and central bank buying of gold. It is concerning how high gold is. It's concerning. It means, do you know how much money has to go into gold for it to be at these prices? And it sold off, and everyone said, okay, that's the end. And look at where we are now. Look at where we are now with gold. We're up another 18% in the last 28 days when everyone said gold's going to continue going down. Silver is not painting the same picture. It's not up as much. Well, it is up as much, but it's still down from its highs. It's up 42% in the last 24 days. I mean, these are ridiculous moves, but they're concerning moves. Great if you invest in gold and silver, like what I've been saying for the last 4 years. But when you're zooming out and saying, actually, this amount of money moving gold this much, why are they buying gold? Why is everyone scared? Well, we've got so many concerns for this year. We've got Iran concerns. We've got AI cracks. We've got sentiment. We've got potentially oil heading higher and causing inflation to stay sticky. We've got the Federal Reserve potentially no longer interested in cutting rates and maybe even putting hikes back on the table. So there's a lot of risks in the market. So just be careful. And as I always say, I'm not going to be here and say, it can come to December of this year and everyone will come back and say, you were wrong. We didn't get a bear market. And I will say, yes, we are wrong. Yes, I was wrong, but I wasn't wrong in what I was saying. Because what I'm saying to you today, don't take the wrong message here. Don't take the message of let me go short the market, let me go sell everything. Don't take away the wrong message from what I'm saying. Because if we don't sell off and we go into a bull market in December of 2026, I'll come out and say, my analysis was that I was wrong and we didn't actually come down. However, what my message to you is be prepared for every scenario. If the stock market and the crypto market reverses and the stock market continues going up, be prepared for that scenario. Are you invested in the market? Are you diversified in the market? Are you just in the riskiest things out there? Stay invested in the market. The research shows buy and hold quality assets, stay invested in the market. But also, are you prepared for the downside? Because there's all these risks out there. And if the markets can go down 20%, 10%, the S&P 500 can go down 10%, individual stocks can go down 80%. We can see some AI stocks literally down 90% since 3 years ago. So if you're in individual stocks, are you prepared for those corrections? If you are in the broader markets, are you prepared for a 10, 20% correction? If you're in individual stocks, are you prepared for a 40, 50% correction? Even on the best stocks out there, even on the best AI stocks out there, are you prepared for a 40, 50% correction? If not, be prepared for those corrections. It's going to be volatile. Next week, we might be up 20% on crypto from a short squeeze, but it's about the trend. And right now, when you look at, let me get rid of these charts on the screen. When you look at simple, I'm going to be doing a chart training course on the, very shortly. It has been delayed, but very shortly we're going to put it, and I'll teach you all about trends. The biggest thing is, what is the trend? You can see Bitcoin, downtrend, downtrend. Once we start breaking these downtrends and start changing structure, then I'll be happy to say we're now in a bull market and the structure changed. If the S&P 500 breaks above 7,000, then we'll be like, okay, the bull market's continuing. But if we start breaking 6,700 and start going into this parallel channel and start crashing 10, 15%, then we'll start looking at a bottom. Be prepared for us to go sideways, be prepared to go to the upside, be prepared to go to downside. Most people are over leveraged towards the upside, and that's why I'm putting out this warning message. So by the end of the year, we might be down, we might not. But at the end of the day, it's not about what happens. It's about being prepared for all scenarios and being prepared for that downside scenarios and understand the risk of the market. I personally, what am I doing? Personally, what I'm doing is is positioning my portfolio in a way where I am prepared for the downside. That doesn't mean I'm just in cash and gold and silver, even though gold and silver have been great. I've got the portfolio challenge. I've got the portfolio challenge. And as you can see, I'm up 0.6% on the day, even when the markets are down 0.8%. I'm up. Let me show you this. Up on, oh, how do I show you this? Why does that look red? And I need to find a way to put it on the show. Anyway, up 0. You can see it in the newsletter. Up 0.6% today, up 1% on the week, up 3.2% on the month. And that's me positioning my portfolio to take advantage of AI, but also be defensive. So what am I buying? Physical silver, copper companies, physical copper, healthcare, because healthcare is going to benefit from AI and it's going to benefit from being defensive. I'm looking at utilities because that's going to benefit from the electrification and it's going to benefit from so that's the AI side, and it's also going to benefit from because everyone needs utilities. So it's and then we're going to look at consumer staples, and then if a crash does occur, then we'll look into the high risk plays. And if it doesn't occur, there's always opportunity anyway. So I'm not just going to be left behind. There's always opportunity in the market anyway. If you want to see the 5,000 pound portfolio challenge, if you want to see the daily news because you want to keep up to date with the daily news, not just fear mongering and FOMO and all the random things you see on news channels, we're not corporately sponsored. Go and check out the daily newsletter. This is all one package. You get the daily newsletter, you get the chart of the day. Every single day I give you a chart. Today was all about Nvidia. You get my thoughts on every story. You get an ad-free experience. You get the market headlines. You get the cheat sheets for all these events. You get deep dive research every day. You get the weekly XRP crypto report. You get the one-on-one DM access. You can ask me any question anytime. You get access to the private community. I'll be telling you when I'm buying crypto, for example, as we caught the $1.10 bottom on XRP and made a 50% gain in a day just last week on that private community. There's an app coming out, I think this weekend, on net worth tracking. There's a chart training course, hopefully coming out in the next week. You can get it all as part of the newsletter. There's a free plan, there's a monthly plan, there's a 1 week free trial for the yearly plan. Here is the link in the live chat. Go and check it out. I want to wish everyone the best of luck. We will be ending this video shortly. I'm going to give you one final analysis and one final look at the market, but be prepared for all scenarios. The best way to reach financial freedom is not to just bet your money every day on XRP and the next big shiny thing. It's actually to have a diversified portfolio, invest in it monthly, let the compounding take hold, and that's how you become financially free. Very few people make money overnight by putting all their money in one basket. Most people just lose it, try again, lose it, try again, lose it. In fact, they could have been compounding the whole time. And if they do make that overnight success, most people lose it anyway. That's what the statistics say because they look at the next gamble. Final look into the market. So if you have just tuned in, PPI inflation shock, 0.3% was consensus on month over month headline. We got 0.5. Year over year was 2.6% consensus. We got 2.9. This was the big shock here. The core numbers, PPI excluding food and energy, month over month was 0.5% higher. Year over year was 3%, and it was actually 3.6%. So big shock, came in very hot. PCE in a couple of weeks' time is going to be hotter. The consensus for that is now going to change towards the upside. Rate hikes are on the table, but most likely we just get one rate cut or none. There is fears of strikes in Iran, and that is looking likely by the end of, it looks like an over 50% chance that there's strikes by March the 10th. And looking like a 21% chance by tomorrow we get a strike. So that can have an effect. But again, look at the research within the newsletter. We did a whole research piece on what happens during war in the stock market. If I give you a synopsis, it's basically stay invested, you'll be fine. If you've got a big diversified portfolio. If you're leveraged, then yes, you're going to have issues. Fed rate cuts. We've just seen a massive decrease in 4 rate cuts this year because of this inflation report. So you're now starting to see, look at this. This has all just changed recently. 1 rate cut is now 6% less likely. It's much less likely now to get 3 rate cuts, 2 rate cuts, 1 rate cut, 4 rate cut, and it's more likely to have no rate cuts. That has just increased on the odds market. Bitcoin is bouncing up. As I said, it can be volatile. You don't always have to have a sudden move towards the downside on bad news. Sometimes the market is weird, but the trend is now forming potentially as towards the downside. Be careful. Be ready. We're going to have a major event from Martyn in the next minute. Let me just click on it. Everyone's got the link now. You'll be directly sent there. Let me close the poll as well. What did everyone say? Were you right? Were you wrong? Let me see. Is the inflation print going to be hot, cold, or in line? Hot, 50%. You guys were right. It came in hot, and we are getting a sell-off. Cold was 28%, and in line, 22%. 469 voters. Thank you very much. Guys, I'm live every day, 2 hours before the opening bell. I'm in the newsletter. I give you all my thoughts. Go check out the newsletter, even if it's a free plan. I'm putting the link in the live chat, or go check out the 1 week free trial. You can message me there. You can ask me the questions there. Can't go wrong with short-term noise maker. Thank you for your honesty. Thank you, Yolanda. Implied Dow open. So what I'm hearing is anything. Biker dudes from Mars. If that's all you're hearing, you've got the wrong end of the stick. You've completely misunderstood what I'm saying. That's just completely. You're taking it completely wrong. Yes, of course, anything can happen. I'm telling you what I think is going to happen, and I'm telling you how to be positioned, how to benefit. If anyone's telling you they know exactly what's going to happen, then what's the point of watching their channel, because they're just lying to you. Okay, Martyn's got an event. We've got the link for it pinned above. If you click on that, you'll go straight to the next live event. Martyn will be live now. So thank you, everyone, for tuning in. Yes, as that person said, very sarcastically in the chat. So what I'm hearing is anything can happen, just like every day. Yes, anything can happen. But what you can change is what you do with your portfolio and be positioned correctly to benefit from different events. That's what it's about. Anything can happen. Be prepared for all scenarios. Right now, we've been spot on with most our predictions. Stay with us. Good luck investing. Until next time, go check out the newsletter. Link is in the live chat. First link in the description. Go to Martyn's event. It's pinned at the top. I'm going to give you the link in the live chat as well. But as always, take care of yourselves and each other.